Now, as we navigate through the digital revolution, money itself is transforming right before our eyes. Yet, there's a big difference between the money in your bank account and the digital transactions you're used to, and what's looming on the horizon with the central bank digital currencies, or CBDCs. Now, when I say digital currency, what springs to your mind? Perhaps you're thinking of checking your online banking, or that satisfying beep of a contactless payment. Or does your mind leap to the world of cryptocurrencies? While it's all digital, it's not all the same game. But wait, isn't using your credit card online or managing your finances through an app already digital money? In a sense, yes, but this represents the current paper money system evolving, not being reinvented. These methods still rely on traditional centralized financial institutions using digital means to increase convenience without fundamentally changing the nature of the currency itself. This is where central bank digital currencies, or CBDCs, step into the limelight. CBDCs represent a significant evolution in the concept of money, transitioning from the traditional physical form of notes and coins to a fully digital format directly issued by the central banks. Different from using credit cards or online banking, which still depend on the usual way of using money, CBDCs introduce a totally different digital kind of money. They aim to improve how our money system works. This could lead to faster and less expensive ways to pay for things, and it might also make it easier to manage and follow the rules of money, solving the problems like expensive fees and slow payments.
Is the Fed working on a digital dollar? We are actually evaluating that. Most major countries are now looking at the possibility of having a digital currency.
All in all, 114 countries representing 95% of the world's GDP are in some way involved with this process, including the US. Now, the obvious question is, why is the Federal Reserve so focused on digitizing dollars if the dollar is already digital and it's already on our phone? The answer is, there's a huge difference between true digital currency and the system we have today, as our current monetary system relies more on digital claims of currency. This is why when we use banks and we transfer from one account to another, we're actually sending digital IOUs and digital claims to money, but not necessarily the money itself. And that's why banks need to use third-party banks to verify transactions to make sure that the money we are sending exists there in the first place. And a true digital currency would be true value transferred from A to B without the use of a bunch of third-party banks. All of this is starting to sound kind of like the things crypto is already trying to solve, except there's a couple huge differences. CBDCs are controlled through a private network by the government, so they're not decentralized, and that gives the government full control over its supply and how quickly they can move it from point A to point B.
Central bank digital currencies are a digital form of fiat money. Fiat money is a government-issued currency that is not backed by a physical commodity such as gold or silver. It is backed by the government that issued it, nothing else. Another feature that is vastly different from physical cash, with both being fiat currency of course, is that CBDCs are easily tracked. Anyone who uses traditional cash knows that cash transactions in most cases are not tracked. Because CBDCs are centralized, programmed, and controlled by their issuers, that level of control enables them to track all transactions a user has been or is currently involved in.
A CBDC would also help with tax revenues because most people wouldn't have to file their taxes. Instead, the government would know exactly how much money we've made, so they would send us an invoice and we would just have to pay. So it sounds like a lot of really great benefits. People are calling the concept of CBDCs as Big Brother's digital dollar. And it makes sense why people are skeptical, because CBDCs will be tied to your unique digital ID that'll be used to build your social proof.
The third difference between the two types of fiat currency, digital and traditional, is how it can be used to execute monetary policy. With the digital dollar, the decrease or an increase in money supply will occur in a matter of seconds. Since a CBDC is under a full control of its issuer, it will make it extremely easy to execute any monetary policy that is deemed necessary and appropriate.
Another benefit is speed. Because money will be programmable, it would hypothetically stabilize the value of the dollar, and it would modernize the banks. It would also make sending money and stimulus by the government much faster, and in theory lower the cost of banking because it would force the banks to compete with the Fed to make transfers and even ATM machines much cheaper.
There's also worry about how this might change the value of the money we use now, even though CBDCs are meant to work alongside and not replace the money we are used to. Countries are looking into and starting to use CBDCs, but I believe they need to find a cautionary balance between embracing the digital innovation and ensuring the safety, privacy, and economic well-being of the citizens. Cryptocurrencies, on the other hand, have broken new ground. They're kind of like the new kids on the block, shaking things up by leveraging this new technology to operate in a completely decentralized manner within a monetary system secured on blockchains. These digital currencies have taken us into a world of decentralization, characterized by immutability, which means it can't be altered, resistance to censorship, and independence from governmental control. However, the general perception has been and still is largely that cryptocurrency is volatile, risky, and unstable, with no real use cases as a money, not even for buying a cup of coffee, and not recognized as a legitimate asset class. But here's the thing. Cryptocurrencies are starting to show their real chops for buying and selling goods and services. Imagine you're hopping from one country to another and you swap some of your home currency for the local cash to buy a cup of coffee or souvenir. Now, with crypto, it's getting like that, but without the hassle of finding a currency exchange booth. People are using cryptocurrencies to buy art, music, and gaming assets. They are even starting to buy physical goods and shop and trade directly in the ecosystem. Some are even earning incomes and yields. It's this big shift towards seeing these digital coins as not just for tech enthusiasts, but as a legit way to pay for things. And as the financial narrative evolves, traditional finance is also beginning to embrace the once marginalized world of cryptocurrency. A pivotal moment in this shift was at the beginning of this year, when the SECs approved the Bitcoin ETFs. This provided a simplified way of investing in Bitcoin without the complexities of direct ownership. This development led to a resounding success, driving daily transactions to a tune of $1 billion and propelling the price of Bitcoin to an all-time high within 2 months of the ETF approval. This significantly changes the market dynamics with institutional involvement. At the forefront of this movement is Larry Fink of BlackRock, the world's largest asset management fund. Fink now champions the dawn of digital currencies and advocates for the tokenization of real-world assets. This opens up a new frontier, allowing anyone, anywhere to own a piece of a skyscraper or a priceless piece of art through digital tokens, thereby democratizing investment in ways previously unimaginable. Here is a clip of him talking on Bloomberg.
Look, I'm very bullish on the long-term viability of Bitcoin.
I was going to say, did that surprise you?
That surprised me how much that's
Really?
gone up. I mean, look, we're creating now a market that has more liquidity, more transparency, and I'm pleasantly surprised, and I would never have predicted it before we filed it, that we were going to see this type of retail demand.
So you thought?
You look at the gains since January 11th when it first came about.
Yes.
Have you ever seen this much inflow this quickly into
IBIT is the fastest growing ETF in the history of ETFs. Nothing has gained assets as fast as IBIT in the history of ETF.
The journey through the world of digital currencies is complex, exhilarating, and undeniably pivotal to the future of finance. As we charter through this together, one thing is clear: the era of digital currency is not just coming, it's here. Join us as we explore each twist and turn of this fascinating journey. And thank you for joining us on this exploration. Subscribe and hit the bell icon to continue unraveling the mysteries of the digital age with us.